Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today, we're going to tackle questions about corporate structures, how they affect taxes, how you can pass your structures on to your kids, and we'll cover a lot of why one is better than the other and in which situations that applies. Tony Lopes, our guest, is an attorney in private practice in the greater Philadelphia area. He counsels individuals, business owners, emerging entrepreneurs, and corporate executives on matters relating to business and succession planning, estate planning and administration, buy-sell agreements, business exit strategies, federal tax planning and controversies, mergers and acquisitions, licensing agreement, intellectual property protection, lease agreements. Basically, he's your go-to business lawyer. Let's meet him. Welcome to the Profit Answer Man, Tony Lopes. It's great to have you join us today.
Thanks, Rocky. I appreciate it. Of course, you were a guest of mine on my podcast, so only right that I should come onto your turf as well and reciprocate a little bit. I really appreciate it.
Absolutely. I like how those conversations flow back and forth. Can you share a little bit with the audience about who you are and what you do?
Sure, thanks. Yeah, I am the founder of Lopes Law, LLC. I'm a lawyer by trade. I also run my own podcast called Self-Made Strategies. You can find Self-Made Strategies wherever you enjoy podcasts, of course, or at selfmadestrategies.com, all one word, at Self-Made Strategies on Instagram. I'm also one of the co-founders of a really cool organization called College Cast. And at that organization, we're actually empowering student voices by helping college students to start their own podcast production. And that's what we're really, really excited about. Of course, I love lawyering, love helping clients, entrepreneurs grow and avoid tax issues and all those things. But really, really excited by some of the production projects I have going on this summer as well. So yeah, thanks for the opportunity.
Very cool. And we'll have to chat about that further later.
Yeah.
So one of the things that you said to me, and I'd really love to kind of dig into this, you said your CPA is out to get you.
Yeah, I do think that.
Why?
No offense to the CPAs out there, but I have yet to run into a CPA that can give me a good reason why their client, who's just a bare bones startup. So we'll set the hypothetical, right? Got a client that walks into your office. There's a CPA at one desk and there's me or a lawyer at the other desk. And the client comes in and says, hey guys, I got a question, or hey gals, if you want to go female protagonist and antagonist for this one. Hey, I have a question. I want to start a business. and I'm not sure what type of entity I should form. And the CPA immediately snap calls S Corp. And I stiff arm the CPA and say, hold on a second, I'm saying LLC. And now I know that every scenario is different. And, we can talk about how, disclaimer here, this is not legal advice. Go use common sense, talk to your lawyers, your accountants, whoever you trust. But the situations that I have run into are CPA has no further information beyond what I just gave you. And the CPA says S Corp, snap calls, S Corp, got to be an S Corp. And I get they're both pass-through entities. So they're both pass-through taxation entities. For anyone who doesn't fully understand what that means, essentially the income, the revenue of the organization minus the expenses, the profit and or loss at the end of the year passes through to the owner of both of those organizations. So the entity does not get taxed at the entity level. So they're both, from a tax perspective, they essentially operate the same way. In other words, at the end of the day, the do I care test, if I'm the entrepreneur or client or business owner, do I care that it's an S Corp or an LLC from a tax perspective? Probably not. There are some reasons to go S Corp over LLC. Mainly, I would make the argument that those reasons are mainly because you care about some passing of the ownership interest through a trust, like a qualified subchapter S trust, a QSST, or a ESBT, an elected small business trust. Both of those are valid answers if you're saying that it's because of that. But remember, we don't know that yet. Client walked in the door cold and said, I want to start a business. And the CPA is saying S Corp. So my conspiracy theory, for lack of a better term, is that the end of year or annual tax filing for an S Corp is a little bit more a little bit more work than it would be for an LLC. And therefore, accountants are out there telling their clients that they should do S Corp so that the accountant can make more money at the end of the year. That's my conspiracy theory. Sorry for the accountants out there who now have made me their favorite villain. But hey, if you don't have haters, you ain't trying hard enough, right? So, but I will say this. I have had clients that have come to me and said, hey, my accountant, by the way, most of these accountants who are giving this advice go out and file for the organizational documents for the client, by the way, which no accountant should be doing. That would be the equivalent of me, who, by the way, I have my LLM in tax, but I would not go out there telling clients I should be doing their taxes. And I think accountants should probably steer clear of doing S Corp filings for their clients for $500 or whatever you're charging your clients to do these, because you're not filing proper articles of incorporation, you're not creating appropriate bylaws for your clients, and you're not making sure that your clients are covered from a legal perspective. Bad boys and girls accountants out there who are doing this. So that's the only reason. Other than that, I mean, from a tax perspective, again, I don't think there's any difference. As a matter of fact, I think there are many advantages to filing as an LLC, almost defaulting to LLC first, and then saying to yourself, all right, maybe I want to go S Corp because of X, Y, Z reason. And I'll list those really quickly because I don't want to spend our entire episode on this. But those are, an LLC is much easier to administer, much less of an administrative burden. You don't need a board. You don't need to have annual meetings, for example, which generally speaking on the books are a requirement for a corporation, S or C or otherwise. S, C, B, take your pick in terms of corporation. You're supposed to have a board. You're supposed to have bylaws. You're supposed to have annual meetings. An LLC is also better from a tax perspective in the sense that as long as you have substantial economic effect, and I won't get into that because many lawyers and accountants and academics don't even fully understand the concept of substantial economic effect. But let's just say that you need to have it to be able to allocate profits and losses as you see fit, so long as you have substantial economic effect again. And the treasury regs and all that in your operating agreement. but the LLC is more flexible in that sense. Another reason that an LLC is more flexible is that, let's say, Rocky, you and I start an organization. So we'll start from scratch. We're the two guys that walk into the office. Lawyer A, Cindy, and accountant B, Sally, are sitting next to each other at the two desks, and they're having this argument. And we say, well, Rocky really wants to be more of like a silent partner, but he's going to put up 50% of the cash. Thanks, Rocky. And Rocky's going to trust me to make like 80% of the day-to-day decisions. So realistically, I'm going to have an 80% voting power, and you're going to have 20, but we're going to split everything else 50-50. Cannot do that in an S Corp. Cannot. Ownership percentage equals control. And in an LLC, we can do that. So we have a lot more flexibility in an LLC. Never mind the fact that you can't have foreign owners in an S Corp, that you can't have more than 100 owners in an S Corp. And look, I get it. In our hypothetical, two guys walked into an office and they're talking about starting a 2-person entity. I get that. But we're looking at long-term, you can't have entities that own S Corp interest. Okay. So you're limiting your client's capacity to go out and get VC funding as well. Potentially with an LLC, that would be different. So those are the reasons, the main reasons. And again, I try not to antagonize my accounting brethren and sistren, but I do, I just think that the few occasions where I've had an accountant that was gutsy enough to say, get your lawyer on the phone. I don't know why he's yapping to you that you should do LLC over S Corp. And then at that point, now I feel challenged and I get on the phone and the lawyer in me kicks in and I get a little feisty. So, I have it out, I duke it out, and I'm saying my piece and the accountant's just, but, and then that happens. So I get it. I think, from an entrepreneurial, we're all out here, we're business owners at the end of the day, and the accountants are trying to generate additional revenue by doing these filings at $500 a piece. Not a good idea in the long-term risk, I think, to your professional livelihood to be doing that kind of thing. And I really do think, for all the reasons that I listed, that most people out there, generally speaking, and after speaking to an attorney and or accountant, should go LLC if they're starting a business.
And so for starting a business, I agree with you, LLC. Where I find the S Corp comes in handy is when they start to have an income of at least a couple $100,000. The S Corp gives you the advantage of taking some of it as a salary and some of it as a distribution, which saves on your Social Security, Medicare tax. And that's the one advantage I see. But again, I tell people you've got to get to a certain size of revenue. And
wholeheartedly agree.
Yeah. The other thing is with an S Corp, you have to take a salary, correct?
You don't have to. And, quite frankly, you can theoretically still take a salary with an LLC. I've never heard of any reason that you can't. And that's one of the things that I've heard a lot. And again, I think, Rocky, to your point, this is why I say I agree with you. At that point, you're adding information, right? You're now saying the client has a specific need for an S Corp. For example, if you had a client that walked in the door and said, I know I have a patentable technology that when this thing hits the market, I'm going to go public. I'm going to have an IPO on the New York Stock Exchange. That's my goal. I would be telling that client structure as an S Corp, because by the time you get to New York Stock Exchange mode, whenever that is, if you get to what you're talking about, it's easier to convert an S Corp to a C, and we can start taking the steps now to make sure that you qualify for all those things.
So for an LLC, I think it comes down to semantics on your salary, in the sense that you don't take a traditional salary as you normally would, because your LLC is immediately going to flow to your tax return. So you can give yourself periodic payments every 2 weeks,
Sure,
but you don't need to pull out the taxes and do all that stuff because it's going to hit your tax return on a quarterly basis or however it is.
I get what you're saying. And even the S Corp salary, though, there's more questions that we need to ask because, you're expensing it at the entity level to affect to some degree Social Security and other taxes. But you're paying ordinary income as an individual on the W-2 income that you're getting. So again, you're kind of sick. This is like when you have a client that comes in the door, right? I'm based in Philly. So wherever people are, you have clients that come in the door that have the old adage that I should form in Nevada or I should form in Delaware because there's no entity tax. And I always say, well, let's take a step back here. Let's calm down. You're running a cupcake business and you finally decided you're going to stop making cupcakes at home and you're going to start selling them to the public. It's gone from side hustle to real business, right? Okay, great. So you're not, to your point, you're not making hundreds of thousands of dollars yet in annual income. So you're not really going to notice the net effect of all of that for a while here. And to be frank, you're going to need a registered agent. You're going to need all sorts of other administrative things that you've now got to take care of. And a lot of these states don't charge you tax, and I'm putting in air quotes. They don't charge you tax, but they charge you an annual LLC fee or whatever, an annual organizational fee. So, it's, penny wise and pound foolish or penny wise and dollar foolish. And it just doesn't make a lot of sense a lot of times. So I say to people, do what's simplest now. It's like another example that doesn't really have a lot to do with law or accounting, for example, is people who get so hyper-focused on the business plan details that they never execute. Right? It happens all the time. Oh, I had this great idea, but I got stuck down on the feasibility study. What are you talking about? Go execute. That's my advice generally to clients is let's talk more about who your clients are and what you need in terms of agreements. And, hopefully you'll have the problem in a few years that you've got 300 grand coming in and maybe we need to restructure. Maybe not even then, but you just take the most flexible route is generally my advice. And let's focus on putting resources towards, what the next steps are to build your business. It's also, I'll tell you this, I'm costing myself money. Truthfully, I charge more to do an S Corp filing than I do to do an LLC filing. It's just more paperwork. It's more burden, more administrative stuff. And I got to coach the client to get their board set up, to talk about bylaws, to discuss all the potential issues. If it's a single member, first of all, and it's an S Corp, you got a problem on your hands. You don't have people on the board yet. You don't have people. So most of the time it's file your LLC. I'm saving you money right now. I really am. File your LLC. It's simpler. It's easier for me as well. And you move on to the next step faster.
The other thing that I've heard some people do is C Corp. And the reason they're doing C Corp is they want to limit their income. And the reason they want to limit their income is they want to stay below the Obamacare cliff. So there's a million things that you have to consider, and you have to have those types of conversations. You got to have the end in mind. And then once you have the end in mind, you can figure out which of these entities helps you best with regards to that.
Yeah, I was on a podcast earlier as well where we were talking about a lot about a similar concept, a little bit more early stage, just more so what entity choice. And I was basically giving the same advice. And again, first of all, the advice is this is not the time for DIY. Okay. You would not go and generally speaking, unless you have some technique turning a wrench. I happened to be a mechanic before I became a lawyer. I was an automotive technician. But if you're not like me, you're probably not going to go work on your own car. Same thing. There's a ton of risk. So why would you bother to save again, to be penny wise and dollar foolish, to try to save a few $100 or whatever it is to go LegalZoom and DIY this, or to go with somebody who doesn't know what they're doing rather than speaking to a professional that speaks your language. So my advice is find a lawyer and an accountant that are focused on helping you grow and that speak your language as an entrepreneur, right? Whatever that is, and that you like, because you're going to want these people around you to give you advice.
Makes total sense to me. Is there anything else that you think that the accountant, CPA, is not serving them well with?
No, generally speaking, no. I think professionals, I'll take the bullet for all of lawyers. I think lawyers are terrible professionals, generally speaking, horrible bedside manner. Most of them don't really align their practice with their clients' goals, right? If you're charging your clients, generally speaking, there are situations where the billable hour makes sense, right? I have no idea how long litigation is going to take. And unfortunately, if the man or woman lawyer on the other side is a complete jerk, and unfortunately odds are that they are, this might take a while. And so I can't really estimate a flat fee on that. But if you came to me and you said, I'm looking to file a single member LLC and I need an operating agreement and an EIN, and I need to sit down with you who's listening needs to sit down with me virtually or whatever. So I'll need you for a couple hours plus all the work to get everything done. How much is that going to cost? I'm not going to tell you it depends. I'm going to tell you it's $1,500. Flat fee, done. That's not where we're going to quibble over how much it is or isn't. That's it, right? If it's a multi-member LLC, it's a little more, but that's because I have to sit down with both members and work out the details of the organization. If you need a master services agreement for your client, $3,000 flat fee. That's a lot of work that goes into that. Many meetings with the client. And I sit down at the end of it. I don't just deliver a document and say, hey, here's your master services agreement. Good luck out there. We sit down. We go through your agreement clause by clause. We talk about what's in it, how you use it as a tool. Make sure that you understand all of the wording in it, because otherwise it's useless. And that's what a lot of lawyers are out there doing as well. So I'm certainly not here to bash accountants. I am here to say that professionals in general are doing a really bad job as a community to service our clients and continuing to race to the bottom now, right, on price. I won't compete with anybody on price. I just told you my prices on a podcast. I stand by them. They don't change. There's no real reason to change. If you've been doing agreements for as long as all these lawyers keep professing that they have been, then why is it depends? Why do you not know how long a master services agreement is going to take you? And you should be averaging that out to make it beneficial to the client. If I finish a little faster with one particular client, why should that matter? You go to the mechanic, you need to get something done. There's a price for the service. There's no, it depends. Let me go see how long it takes. Some mechanics do still do that, actually. But I'm starting to realize I've been joining a lot of crappy industries throughout my career. I was a mechanic. People don't trust mechanics. Now I'm a lawyer. People don't like lawyers. I got to find something else. I got to go into chef school or something. I'm kidding. So yeah, not to bash accountants. I think it's professionals who don't take the time to triage their clients appropriately when they show up, and then, provide a bad service, are giving us all a bad name out there, and charge hourly with no regard for the client's outcomes.
Makes total sense. And part of the way I did my pricing is I told people I have a flat monthly price, including support. There's no surprises. There's no, oh, that's extra. Like, whatever you want to ask me during our time together is free game. I will give you advice, and I don't. I do dime you.
I agree with you, Rocky. I offer the same service to clients who want sort of an outside general counsel who have more recurring issues, right? If we're seeing that these monthly bills are recurring and that it's stable month to month, we're meeting for a couple hours, and this is the type of work I want you to do, we'll come up with a fair flat rate monthly. We'll talk about it. We'll make sure it's a good fit for everybody. And we'll make sure that the right team is in place to support that. I wholeheartedly agree with you. There is always the caveat with merger and acquisition negotiations. Again, the problem is actually usually the lawyer on the other side's running the clock and I'm not. So I can't, unfortunately, afford the flat fee because that person is charging for every I dotted, every email read, every 10th of an hour that they thought about your matter and whatever else. And here I am dealing with a flood of emails trying to do the best job for my client. So unfortunately, what I usually do though is say to my clients, I'll be real transparent with you. Here's where we are. Here's how much I billed for this. You'll get monthly invoices. We'll talk about things in detail. I will try not to nickel and dime you to the very best of my ability. And a lot of times I push the other lawyer to get on the phone. Lawyers hate getting on the phone, right? Because that's going to cut down. We're going to have a talk. We're not going to passive aggressively send redlined Word documents, version 9, back to each other, right? By the time it's gotten past version 2, we're getting on the phone because I don't want to sit here and my comments and then they ignore them and then it goes back and forth and my client's basically paying for nothing. And so that's really what I hate at the end of the day, to be honest.
I do my best to never get lawyers involved.
I don't blame you.
They're the only ones who make money when that happens.
That's what there's an old adage among lawyers that in a class action suit, no one has any class and the only individuals making money are the lawyers.
Yeah. Very true. I've noticed that. So as we talk about this, some people are interested in at some point passing their company down to kids.
Right.
What are some of your thoughts on that and what's the best way to do that?
Well, it's very variable, right? This gets really hyper specific into each individual situation. I would say start early, talk to a trust and estates attorney and someone that understands, a T&E attorney, a trust and estates attorney that understands business, that has at least a little bit of knowledge about mergers and acquisitions and tax and, tax risk and those types of things. In that instance, going back to our original discussion, a QSST or an ESBT might be most beneficial because generally speaking, you can leverage that not only to transfer the ownership to your following subsequent generations, but also to create cash flow for yourself. And I won't get into all of the details of how that happens because we'd be here all day. There are thousands and thousands and thousands of different trust options. But there are ways to create tax leveraged transfers of wealth, of assets of that nature in a strategic way, avoiding or minimizing your tax burden as much as possible. Nothing illegal, totally on the books, totally legal, totally within the Treasury regulations. But you want to make sure that you're talking to somebody who understands all of those moving parts. And again, who understands your business issues. Because when we're talking about transfer of wealth or succession planning, which is really what this falls under in terms of umbrella, it's not just the finances, right? Rocky, let's say you own a business and you have 3 kids. One of them has been blood, sweat, and tears in that business since they were 18 or whatever. Went to college, but worked in it summers, worked in it after college. That business is their livelihood. The other 2, one's a doctor, one married rich, and they really don't care about the business. But when it comes to succession planning, maybe they think they're entitled to their 3rd, right? So what do you do there? That's a tough discussion that you need to be having with your attorney, whoever's helping you succession plan. You need to get the whole team involved there. The accountant should be involved. The attorney should be involved. Anyone else who's helping with, and there are many organizations out there that can help with that softer stuff to help make that transition smoother, to open the doors to those conversations and to discuss what that means.
Sell it to the one kid.
Well,
and that kind of,
sometimes that doesn't solve the problem though, because the other 2, if the business takes off, the other 2 feel like they lost out on the cash cow, right? That's continuing to create and generate wealth if the one who kept it. The flip side is, if But see, that's a family dynamic that's really difficult to overcome. I will tell you this, if you're thinking succession planning, whatever you think it is, you probably need to triple the amount of time that you need. It's going to take the fastest will be 3 to 4 years to put a proper succession plan in place smoothly. And that's first generation to second to third, third to fourth. Those are unicorns. They rarely exist. A third to fourth generation business transfer is extremely rare. If you look at the statistics, they're way low. So these issues not only pop up once, but then they pop up again and again and again, and it's really, really difficult. There are other groups out there also, not only that in the professional services realm provide you with strategies, but there are a lot of times support groups for entrepreneurs who are considering these issues. And so you might want to look in your community, whatever that is, for those types of groups. Maybe reach out to other colleagues, entrepreneurs in other spaces that are friends of yours that maybe have gone through this. Again, time is a huge factor because these conversations slow things down, and there are often a lot of moving parts and information that's missing from the succession plan as a whole. And then the other issue is, quite frankly, that this just becomes difficult. A lot of times, even the individual who created the business or the individual who's transferring the ownership interest has a hard time letting go, and they have to stop parenting. There are so many soft and mushy, for lack of a better term, issues that you can't really sink your teeth into until you're in the middle of it. And it's unwieldy, very unwieldy.
And these are the things that I say start when your kid is still young and you start having family discussions around expectations and those types of things before the kid is even 18.
Absolutely.
And that will help to have good clarity up front. And sometimes it's also, you may not want your kids. And as you get to a larger business, it's, do you want the kids involved or not? Sure. Have they learned how to run the business? And so there's a ton of issues there that need to be covered.
Yeah, absolutely.
Well, cool. I think that was a lot for people to digest and think about. And these are the conversations that they need to have between their families and with their accountant and with their tax person. And I think it's a good idea as you run your business to have a CPA on your team, to have an attorney on your team. If there's other people you need on your team, put them on your team, and then make sure that they are all together on the phone to have a conversation once in a while so that everybody is on the same page and you don't have to sit there and go, well, he said this and she said that and you said this. Let's all get on the phone and let's have the call and let's get clarity and make sure that they're all working to row your boat in the direction you need to go. And if they're unwilling to do that, fire them.
100% agree. And I think that one of the things that I've learned both from watching entrepreneurial clients and from the entrepreneurial endeavors, the businesses that I've been at the helm of, those routine meetings create traction that moves things along. So set a recurring meeting with your team, preferably monthly, keep it tight, keep it concise, get one of them to send an agenda out, have someone send a follow-up email with action items and with what was discussed and all of that stuff. And that way that helps to create transparency, clarity, and move sort of things down the line.
Very cool. If people would like to learn more about you and what you do, what is the best way for them to do that?
Sure. So I'm on LinkedIn. You can find me, Tony Lopes. I'm the CVO, the Chief Vision Officer of CollegeCast LLC, at CollegeCast Pods on Instagram or Twitter, at Self-Made Strategies on Instagram, at Lopes Law LLC on Instagram as well. And info at lopeslawllc.com is the best way to reach me by email. You can find me, short of sending a smoke signal, You can find me on a bunch of different platforms. So pretty easy to reach most of the time.
And we will put that into the show notes to make it easy for people.
Awesome. I just want to say before I go, Rocky, that if you're listening to this show and you love what Rocky's doing, he does a great job. He was a great guest on my show as well. Please please subscribe. That is the best way to support what Rocky is doing to keep the show alive, to get it to other people.
Thank you so much. I appreciate that. Have a great day, Tony.
You too, Rocky. Thanks very much.
What about you? Do you set up meetings with your accountant and your lawyer to make sure everyone is on the same page? When you get conflicting information and everyone's not on the same page, you're the one stuck with all the problems. Don't let that happen. I usually provide my advice, and then I ask people to check with the other professionals on their team. And sometimes we all need to get together on a call and hash it out and make sure we've got it correct. And if your team is not willing to do that, well, it's time to find a new team. Remember, you don't need more resources, you need to be more resourceful. We focus on the bottom line. If you want a done-for-you service, you can have me as your Chief Profitability Officer. Because you have your zone of genius and want to spend your time doing what you love. I only work with a handful of clients, so they get my full attention. I work with business owners who have or are growing to $500,000 to $5 million in revenue. You can use the scheduling link in the show notes to get on my calendar for a good fit conversation to see if I'm the right person to support you and how I can help you. If you want to learn about living the life of your dreams, check out my other podcast, Richer Soul. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.